party is, and that is in the primary market. Laurus Labs has gone off a bit from the high listing that it had, but still, I guess investors would like even an 11 to 12% premium. Let's see where it settles, but it looks good. Actually, Mr. S.P. Tulsian has joined us on the phone line. Morning, Mr. Tulsian. Well, we did want your view on Treehouse, but first up, let's take the positive news. Laurus Labs started off at 490. That was a 14% premium. Now 478. You like that stock?
No, Lata, actually the stock is quite expensive. If you see the situation, if I take the FY 15, 16 and 16, 17, 17 APS for the current year is estimated, I am in my estimation closer to about 16 rupees. So if you go by the P multiple, it is 27. If you go by the debt to equity ratio, debt is at 1.2211. That means debt is also quite high. And if you recall at the time of listing of Sheela Foam, I've said that let's not get carried away by the one-day listing. And we have seen the fate of the Sheela Foam, because on the first day things were all on the very gungo kind of things, 20% upper circuit. Because of the low participation, we see these kind of prices getting discovered on the first couple of days.
Okay.
But this is not the realistic price, because if you really take on any parameter, maybe concentrated product concentration risk, rich valuation, single-digit margin, and as I said, the expensive valuation, I'm not convinced with that.
Okay, Mr. Tulsian, we'll in fact come back to you. We'll call you again for a Treehouse. So thank you for giving us your view on Laurus Labs, because now we have the management of Laurus Labs. So let's go straight across to him. Ravi Kumar, the Executive Director and CFO of Laurus Labs, joins us now to talk about the new listing as well as the scope for the company. Mr. Kumar, thank you for joining us. Now that your company has listed, can you tell us what the growth could be for the company over the next 2 years?
Growth will be very good. We have a lot of investments made, and the revenues have not yet generated, and then there will be very good growth in the next coming years.
Okay. Well, if you can give us some idea, will you be able to maintain the kind of run rate that you have? I mean, last 5 years, your compounded annual sales growth has been 40%. Is that maintainable, or has your base gotten very big?
No, the base has been increased if you look at from the last 5 years to from now to next 5 years, but we can maintain a very good growth.
Okay. When you reduce your debt with this, how much are you planning to reduce in the first place? What will your debt become after you cut it down?
Our debt will be, our total debt is going to be 750 crore post IPO. We already repaid one debt on last Saturday, and we will be paying in the balance amount in this in this week.
Okay, so you told us that you'll be able to maintain the growth. In FY16, your revenues were at about 1,800 crores, which was a growth of 30%. If you take the same amount of growth, then that you're looking at about revenues of more than 2,500 crores in FY18. Is that a reasonable estimate to look at in FY17, I mean, by the end of the year?
Right now, we are not giving any guidance, but we can maintain I don't say that 30% growth we will maintain, but we will maintain a growth. There is all ingredients are there. So we have we invested into the formulations, and then we have already completed our US FDA inspection, and we just got only in one 483, and then we already submitted our replies. So in the next 12 to 18 months time, we will have a good potential growth.
So what about the margins, sir? Because this year, FY16 was a very good year for you. Your margins expanded to more than 20%. Will you see the same kind of expansion in FY17 and FY18 as well?
Our first half of the current fiscal, our margins have increased by 1%. So our EBITDA margin was 22%.
Yes. Okay. So what can we expect in the second half?
We will maintain this kind of margins.
Actually, we want to look far out, sir. I'm not asking you to give a guidance in terms of the exact percentages, but will you be able to at least maintain, this kind of a run rate, ballpark? Your sales growth is 40%, your EBITDA growth is about 48%. These are tall numbers. Earnings growth has been 58%. Will you be somewhere in this region, give or take 5–10%?
No, see, I want to tell you broadly, qualitatively I can tell you. So today whatever be the expenses we are incurring for our formulation business, new business, contract manufacturing business, we are expensing out. There is no revenue we are generating out of these revenues, these expenses. So once we start generating revenues, our EBITDAs will increase further, our revenue will increase further.
When is that? When do you completely? When will you be ready with your formulation unit, and when will it start generating money commercially? When does it start generating cash?
Formulation unit, we already completed 2 ANDAs. We already filed. We already got it triggered up for first ANDA in November 2017. We expect in FY 18, fag end of FY 18 or an early FY 19, we will start generating revenues from formulations.
Okay. I wanted a little more detail on the hepatitis C API business, because we are seeing a lot of growth in the portfolio there. What kind of growth would you be looking at over the next 2 years? Will it be 15%, 20%? And also, you have a tie-up with NATCO. Can you give us more details on that?
Sure. NATCO and Laurus has got tied up, and we have a contract. With that contract, we will supply an API to them. They will make formulation and sell the formulation in the market. And then the profits will be shared equally. Both of them profit shared equally. Like similarly, if we sell any APIs, we will share the profit with them. So it is a very unique contract. We have an substantial amounts we have generated out of this in the last year and current year. And this is still in a positive growth mode.
Mr. Ravi Kumar, what about the anti-AIDS API?
Anti-AIDS API, one API we have market share of 2/3. So another API we have another 2 APIs we have more than 25% of the market share. So in these anti-AIDS products, actually we have been supplying, and then now we have been investing resources to optimize the cost so that we can make more money in the over period of time on this segment.
Is this tender based, your offer, since you have such a large market? Are people approaching you through tenders, or is it a one-on-one bilateral arrangement?
It's a two, three types of business. One is a tender business. South African tender is for the longer term period. It's a 3-year period. And some of the tenders are a year period.
Okay.
And this anti-AIDS, we are also getting supplied to the European markets and then the US markets whenever they are getting in expire.
Okay.
Expire in the respective countries. So we expect in the anti-AIDS in the European market in a big way in the next 12 to 18 months time.
Okay, so you just coming back to the hepatitis C growth, you said that the profits will be split between you and NATCO. What could the quantum of profits be, ballpark, for the first couple of years, and what kind of percentage growth are we looking at from this business?
We expect the growth will be in the teens only. Teens growth we can expect out of this business.
Do you have process patents?
In this?
Yes.
In hepatitis C?
Yes.
We don't have, but we have overall we have a lot of process patents.
In which
We
areas?
already got process patents, and then we are in the process of, we have all segments. We have an anti-AIDS, anti-cancer.
Okay.
So we have an various segments we have.
All right. Thank you very much, Mr. Ravi Kumar, for joining us, and we hope next time your lips will be less sealed in terms of giving us some visibility of your future business. Well, that's Laura.